All right, Lobo. So let's talk about, I guess, one of the more important things of what happened last week, the European Central Bank rising interest rates. Do you think that the fact that the ECB now shows signs of wanting to be more aggressive moving forward, do you think that would benefit gold by pulling on the dollar's, I want to say, perceived strength? Because it isn't, because it's pulling the DXY down, really. So
Right.
what do you think? Is that going to benefit gold?
Well, we could see when we have data, right, on that day where Europe shocked the world, and it really was a shock. I mean, even people said, "Oh yeah, they're going to get tough." They thought 25 basis points. Some people thought they wouldn't go at all. So for them to go with the double was, I think, a surprise even to most contrarians out there. So yes, it was a shock. We saw a strong response. Wasn't this last edition of our weekly digest, but I think it was a couple of editions ago. I put gold in the dollar, gold in the euro, and they've been tracking very closely as both of them are anti-dollar. And so we saw this really in spades on the announcement of dollar drops, knee-jerk reaction, gold and the euro, soar. So as a thesis goes, I find it quite interesting. If now the ECB is going to be the new tough sheriff in town, and that's bullish for the euro, then as competitors to the dollar, and in terms of spot price and in terms of international commodities markets, commodities are still priced in dollars. Gold is priced in the dollar. So anything that's bearish for the dollar has some beneficial impact on gold. So it's an exciting thesis. Wow, hey, maybe our fortunes have changed. The tide has turned. Now the ECB is going to be the leader in the fight against inflation, and that's going to be great for gold. Not so fast. So as a thesis goes, it's an exciting thesis. And if it played out that way, I think that would happen. That would be good for gold. But will that happen? It's a completely different question. And the fact that they did this now and they're talking tough, there's an actual war going on the eastern side of Europe, not just a metaphorical war. There's also, I think, the economic war, which is more important for the things that we're talking about. But there's an actual war that's at the root of that, which could take all kinds of unexpected turns tomorrow. So, and to give credit where due, you look at the talking heads on financial media, and even the mainstream people say, is Europe even investable now? Like, nobody knows. If X, Y, or Z happens in the war, if Russia shuts off the gas again, would the ECB tighten or loosen? Right? They could tighten to fight the inflation, or they could loosen because that would hurt the economy. Either one would be a fairly irrational reaction to that same event. So how do you invest when you can't? There's no prediction function. There's no knowing what the ECB might do under the very same circumstance. And you're there, I'm not, but tell me if I'm wrong. Things look kind of crappy, I think, is the technical term for how the outlook looks in Europe right now. So not to beat this to death, all I'm saying is, yes, the mechanic is very positive for gold. We saw that, we just did 2 days ago. Yeah. But that doesn't mean that it will stay that way. And I don't think anybody knows that it will. I mean, the ECB has now just given itself a little bit of powder to loosen, right? If things get bad, they can now say, oh, we're loosening policy to help out the economy. They didn't have that option before. Now they have that. So very interesting. It's a big deal. It's kind of exciting, but I think it's very premature to say it. Therefore, we know that the price of gold is going to go higher on this basis.
Okay, fair enough. So no moon talks is what I was hoping for. But no, you're right. And
more like maybe moon stocks. Definitely not for sure moon stocks. Don't sell the farm and board the rocket today.
It's true, yeah. But did you think, though, that gold went up because the DXY went down, or was there a different fundamental dynamic supporting that move? Because silver didn't go up. Silver actually closed down 1%, I believe.
Okay, hold on. Well, we have more data there. I mean, actually, silver and gold did respond at the same time to the ECB decision, and they both went up. Friday, the next day, we had the PMIs, and that produced a very differential response where gold went up again and silver went down. But I do think that you're putting your finger on something right here, in that the DXY, the instant response was euro and gold up, dollar down. But then later the dollar revert, like within less than an hour, the dollar spiked back up again, and then it waffled and it ended up closing the day down. But that's really interesting. I mean, deep-pocketed players here had very different responses to the data at the time. And if you just look at the close, maybe the moment-to-moment signal is too much noise in there. But I think it's interesting that did happen. And if you look at the close, you miss the fact that initially they responded very differently. And then for a while, like all three were going up. So there is more going on here than just DXY or just euro dollar. I also think that a significant amount of fear prompts people to buy safe haven assets. That's why they're safe haven assets. That includes gold and silver. And I think that happened this last Thursday. There was a safe haven buy that was, if anything, only a little related to moves in the DXY.
Do you ever look at the gold to silver ratio, though? Because now it's becoming even more in favor of silver. I guess, do you ever use that for yourself?
This is the Darth Silver question here. We'll see if you get me in trouble here. I have disregarded it for a long time because extremes in the gold-silver ratio do come before a reversion to the mean. Like that does happen. That's real. When you have something super extreme like 125 to 1 that we had a while back, that seemed unsustainable, and lo and behold, it did come back to only 80 or something, right? But the problem with that, I mean, that's real. That happens. The problem, though, is it doesn't tell you if silver is going to come up to close the gap with gold, or if gold's going to come down to close the gap with silver. So I haven't found it particularly useful. I saw some work. I forgot the name of the woman, a UK-based woman I was on a panel discussion with a couple of years ago, and she pointed out that under certain circumstances, actually you could predict direction. That I don't remember off the top of my head because I haven't seen it help in recent years. But I understand that if you look back in the data, there is a certain combination of circumstances that reasonably accurately predicts a rise in silver prices. Like silver, under these circumstances, silver will catch up. My problem with that is, I think that's true. That actually does happen, or has happened, but things have changed in recent years. This is the Darth Silver angle here, where the industrial side of silver is becoming so important. On days like yesterday, where we see bad industrial news, the safe haven thing works out for gold, but not for silver. Silver actually, in the afternoon, particularly after the second whammy, when the US PMI came out, silver and copper both went in almost the exact same curve. You could superimpose these two charts and they look quite similar. And that, at least at that moment, tells me silver is being driven by its industrial side. The good news is that, and you're stealing a little bit of my thunder again, Antonio. We do these things on Saturdays. My Saturday edition of the free newsletter is about to go out, and I talk about this very thing. The good news is that we still see gold and silver going up and down the same way almost every day. I mean, Friday was unusual, but most days they go up and down together. Now the ratio changes, right? And that's important, but they go up and down together. And that too is important because it tells me that for all the industrial sides, the solar panels and all this other stuff, silver still trades as a monetary metal. That's still true. And I'm betting my own money on this, by the way. I'm willing to bet that silver will take off with gold in the next big breakout because it still trades as a monetary metal. But it also trades on this industrial side. And I think that's becoming more and more important. And I think silver bugs who get too fanatic about this and want to ignore the data because it's not consistent with your yay silver thesis, I think you do yourself a disservice. I mean, I'm not bashing silver. I'm not anti-silver. I'm just saying you've got to look at the data. And the data increasingly over the last 2 years is showing greater and greater divergence between gold and silver. And the thesis that silver always catches up and surpasses gold in a bull market by the end of that market, that has been true for 50 years, except in 2020. It did not happen. And we are now far enough from the 2020 spike that I don't think you can call whatever happens next a part of that same movement. So there is now, and this is the first time, right? This is different. This is the first time. And silver did not more than catch up with gold in the 2020 surge. So that doesn't mean, it's, again, I'm not being Darth Silver. I'm not saying forget silver, I hate silver. That's not the message. The message is that we've got data that says the market is changing.
Right. You're making it very hard for me to come up with a title for this video, because if you had said that you hate silver, everybody would watch it. But,
that would be the clickbait, my friend. Feel free to make me look like Darth Silver, and then hopefully the rational people out there will listen to what I've said and look at the data. And sorry, just to wrap up, where we were, I forgot how we got into this, but I am bullish on silver. I'm just saying that I think it makes sense. I think it does not make sense to make that assumption that silver has to surpass gold in this bull market. And you know what? Even if it doesn't surpass gold, but it goes up with gold, that's okay. My silver stocks will work out. Now, here's the other thing completely separate from this, and that is that the industrial side actually gives silver two ways to win, or gives silver a way to win for shareholders, deliver for shareholders in silver companies that gold does not. And that's the industrial side. I mean, people talk about new uses for gold. They're using gold in crucibles for little fusion experiments. You know what? I think I could personally provide all the gold necessary for all the fusion experiments for the next 10 years. This is not going to move the market, right? Whereas solar panels and medical silver and this other stuff, that's big. That's big offtake, like permanent or quasi-permanent offtake from the market. So, the fact that silver has its industrial side, it's a fact. It's not just Darth Silver saying so, that's a fact. That fact gives silver an upside area and a whole area for positive outcomes for shareholders in silver companies that gold doesn't have. So I like that. I see it as giving me optionality or different kicks at the can, whatever metaphor from Doug or Rick that you want to use. So I'm a silver bull. I just hope I'm, not a blind bull charging at a red flag, but an eyes open bull, investing for a good reason.
Fair enough. I spoke to the Uranium Insider last week in the weekly show. I don't know if you saw that, but he told me specifically about uranium. He said something that was an interesting phrase. When I asked him if he thought we could go even lower in uranium stocks, and he said, well, how far can you fall jumping off the basement window? Do you think we're at the basement window for gold and silver right now, or not necessarily?
Well, actually, I'll put them all in there. Well, gold and silver are different. Monetary metals are different from other commodities. But I think it's premature to say that we're looking at the basement window. And I know that I have a lot of peers out there who are trying to reassure people, and I don't want to cause any fights here between your guests, Antonio. And I'm not actually saying that commodities are a bad investment now, get out. But I absolutely believe that there could be more downside, particularly in the more purely industrial commodities. The world is waking up to the recession that you and I knew was coming for a long time. And I suspect most of our audience, they're not surprised by the recession that's shaping up. The mainstream, you look at the talking heads on financial media yesterday, you could almost see their eyes like doubling when they saw the yield curve. I mean, the freaking 6-month compared to the 10-year now, it's unbelievable. Well, it would be unbelievable if you drank the Kool-Aid, right? What I'm saying is that as this awful reality rolls out, there's going to be a lot of knee-jerk selling of, recession, bad for commodities. And even though that doesn't necessarily have to be, I do think that becomes a self-fulfilling prophecy. A lot of your traders out there, they're not Rick Rules or Doug Casey's or Lobo Tiggres, or they're not to include myself in that group. Sorry. They're not like us. They don't see the world the way we do. And they're going to see recession, sell commodities. Even if tomorrow it turns out that we don't have enough copper, or, more major copper mines shut down, doesn't matter. Recession, sell commodities, right? So it may look like the basement window, but who knows? There could be a sub basement or two below that we could fall down if we jump in the elevator shaft now. So just remember, I think maybe some of our younger investors won't remember this, but I think most of our audience probably remembers 2008, or they read about it. And as bad as things got, every time you fell off a waterfall and hit those rocks at the bottom, it felt like, oh, this is the bottom. I'm bleeding. Everything's horrible. Maybe it's safe to buy again. And then no, it turns out the rapid swept you over another cliff and it went down again. And that happened like 3 or 4 times. So what am I saying? I'm not saying it's terrible, get out. I'm saying don't be naive. Just because something is off 50, 75% doesn't mean that if we get a serious waterfall event, which we haven't really had yet, we've had a terrible rout, but we haven't had a crash. And if that happens, your 50 to 75s can turn into 75 to 95% off. We've seen this. We know it happens. Hasn't happened yet. Not promising it will happen, but I think it's a mistake to say it can't. Now, that doesn't mean you don't buy a super bargain on the table. If you have none and you're looking for opportunities, it means you only buy it if you're willing to tighten your belt, get in that barrel and go over the next waterfall if that's what's ahead. If you can't take that, if you can't buy something and see it cut in half again, don't buy it today. Now, if you can and you're confident it's going to go up later, yeah, maybe there's no waterfall. Maybe now is the bottom. I don't want to tell anybody, don't ever buy anything. Just only buy if you really, really can handle it, because it will be brutal if things melt down further. I am personally rethinking this. I have been watching for these waterfall events. The resiliency of the broader markets to serious body blows has been impressive. We've got the Fed up next week, Antonio. I'm sure you were going to ask me about that before we go away in this interview. But if that doesn't sink the ship, then I probably will start buying, even though I think there is more downside ahead. Potentially, even though I think the potential for more downside could be ahead. There are enough screaming bargains right now that I would be willing to do, as I just said. I would be willing to buy a screaming bargain and just hang on, hodl, as our Bitcoin friends say, if we do go over a waterfall ahead. I'm not quite there yet. A week or two, and I think I'll know. But right now, that's my answer.
I was going to ask you what you think is going to happen next week, and like not what you think, what you want to see happen next week to make you a buyer. So let's maybe sort of twist that question a little bit, because you just gave a part away of that. What kind of a setting do you want to see macroeconomically or in the PM sector specifically that is going to make you a buyer? Like, well, I guess that's it.
Right. The simplest one right now is not all clear, because you never know for sure what's going to happen. Surprises can happen. But I have felt a very elevated sense of risk of these waterfall events. The instability in the system globally is so high. I mean, it's just kind of gobsmacking, Antonio, the optimism and the resilience of the markets in the face of an actual shooting war. And okay, it's Eastern Europe, but Ukraine is not that far from Vienna. And the economic war is global. I mean, nobody is untouched by this economic war. And that is just getting worse. So I have been surprised by how relatively benign, okay, the S&P is down whatever percent, markets have reacted, but they've not crashed. They have proven stronger than I thought. So that's the answer to the question. I have felt this elevated sense of risk. It seems like maybe I was too worried. And if that sense of elevated risk goes away, if the Fed takes bold action and nothing happens, so I don't know what the Fed's going to do. I suspect they're just going to go with what's more or less expected. They have permission, right, by the bond market vigilantes to go 75. So why rock the boat? 75 is plenty. It's not a prediction, just a thought. But that's still pretty big. If they did that, or if they did 100 and the markets didn't freak out, then that would tell me that my sense of elevated risk was oversensitive. Yeah, and so if the markets can handle what the central banks are doing, then that would certainly get me back into the monetary metals, because the inflation side and the systemic risk, the safe haven demand, and the inflation, the persistent, all that's very good for the monetary metals. So that would get me back to monetary metals. The industrial metals, it would depend on the shape of the recession. Like, there's still this idea out there that it's going to be a mild recession. Even the mainstream has conceded now, yeah, we're headed for a recession. We may even be in technical recession. They dismiss it. Oh, it's just technical. But the reality is that we're in recession. The everyday person experiences recession, and how bad that gets will impact not just the traders and speculators and the self-fulfilling prophecy on industrial minerals, but an actual recession really does affect demand. I mean, so I need to see how that shapes up.
I think
sorry, just real quick, if the recession is actually as mild as the talking heads say, and we have high inflation, I actually think the industrial commodities will come roaring back sooner rather than later. But I don't know that will happen yet. So that's a wait and see. And sorry, just back to Justin Hoon and the uranium. I do think uranium is different. Uranium still is priced at a level that it can't be supplied sufficiently, absent a major nuclear accident. I don't think inflation, deflation, recession, reflation, whatever, none of these things ultimately is more important than the fact that you can't supply the market at current price levels.
Yeah.
So I think near term uranium can still get knocked around a bit by this perception that the energy sector of the markets is down or whatever, or is going down. But I think that's short-lived. I'm extremely bullish on uranium, absent a major accident. I think by the end of this year it goes higher. I'll be surprised if not, or within a year. I'll be very surprised if we're not looking at sustained higher uranium prices in that time frame.